it's just consistency. If you're consistently looking at properties and doing it, great. And finding lenders, great, because things are changing. The Fed is tightening everything. For 10 to 12 years, there was a whole generation of investors who is just easier, lower rates, properties going up. It's just the change is now happening.
Yeah.
And everything's tightening up. Lenders are disappearing. So there used to be a whole pool of lenders looking for everyone. Like they would just throw money at everyone. Now there's this little pool and they're like, yeah, I don't like you. I mean, like they're getting selective. So to stand out, you're going to have to do a few things in this market. But guess what? This is also the market where the best deals come out. So the people who set themselves up in this kind of market are going to really win.
That makes sense, right? Like once, if interest rates come back down, if the Fed eventually loosens things up, then those who were able to, be successful under the tighter, environment will then be really successful. Is that what you're saying?
Well, yeah. Typically how markets work is when interest rates go way up, people can afford less. So home prices start coming down. Typically what happens is rates go up, property sales slow, and the property values either stop or they go down a little bit. So if you buy, and then there's this pent-up demand. There's people for a year and a half who are like, I can't buy. I'm living with my parents. I'm living with all these other people. What do I do? And then 18 months from now, rates go back down maybe to 5.5, and now they can afford it. Now there's this whole, wave of people coming to the market buying properties. Guess what happens? Prices go. So if you own a property, say you buy a property right now that used to sell for $400, now you buy for $350, and in 2 years the wave comes back. It's more than likely that $400,000 you bought for $350 is going to probably sell for $450 or $500 in 2 years. I mean, that's a great return.
Yeah.
And that's what happens in these cycles is when people start running away, they stop buying, the smart investors come in, buy in this time and hold until they could get better rates than two, or they could sell or do whatever. And they enjoy life for a little bit. I helped someone in 2010 buy 10 homes in 1 year, and it put him in retirement. He put nothing into them because he bought them at such good numbers, and they cash flowed way back then. And then 12 years later, they all had at least 3x. Some of them had 4x the value, and so did the rents.
Oh, that's awesome.
And they were cash flowing $500 a month back then. He set himself up in 1 year for the rest of his life because he bought when everyone else was running.
So you said they were $500 a month.
$500 cash flow. So after he paid his mortgage and everything, he brought home $500 on each property every month. That was his positive cash flow on that property. When I talked to him in 2022, he only owed on 3 properties. He had paid 7 off. Rents had gone up. Values had gone up. He's just enjoying life. It just on 10 regular homes up in Thornton, in Westminster, up in Colorado.
Does he rent? So he rents them out?
He rents them all out, yeah.